Good evening, everyone, and welcome back to my 6-part video series, which is all about business financial literacy for the independent stylist. In week 1, we talked about picking the right business structure, why it's important to pick the right business structure, and what you need to understand and know before you choose a particular business structure. In part 2, we talked about setting up an accounting system and why it's important for you to set up an accounting system even if you are an independent stylist and you think that just because you're an independent stylist that you might not need one. Well, we talked about the importance of even independent stylists setting up or having a bookkeeping system. In part 3, we're going to be talking about cash flow management and why it's important to make sure that you manage your cash flow. Now, before we start talking about cash flow management, I first want to explain what the difference is between cash flow and net income. Because people do ask me sometimes, well, what's the difference between net income and cash flow? Or they'll say something like, I looked at my cash flow statement and looked at my income statement, my profit and loss statement, and the numbers didn't match, and I don't understand why. Well, the reason is because when you're looking at your profit and loss statement or your income statement, you're looking at all the money that came in that is connected with the operations of your business. And of course, all the money that went out that is also connected to the operations of your business. Whereas when you're looking at a cash flow statement, you're looking at all the money that came in from not only operations, but other inflows of cash. For example, you may have taken a loan out. For those of you that got the payroll protection paycheck loan, you would see that information in addition to seeing it on your balance sheet as a liability. You'll also see it on your cash flow statement as an inflow of cash. Or if you sold an equipment, let's say, for example, you decided to sell your salon equipment and purchase new equipment. Well, the money that you received from the sale of the equipment is going to show up on your cash flow statement. In addition to that, all the money that you received based upon the operations of your business is also going to show up on your cash flow statement. So really your cash flow statement shows you all the money that came in, all the cash that came in, and then all the cash that went out. So part of the cash that goes out would be your expenses from operations. It would be you paying back, let's say you have a loan and you're paying back that loan, that's a cash outflow. Or if you purchase brand new equipment for the salon, which is considered investing, you will also see a cash outflow from investing. So that's the difference between the cash flow statements and the profit and loss statement. One only shows operations of the business, which is the profit and loss statement, and one shows all the cash that came into the business and all the cash that left the business, and that's your cash flow statement. Okay, so now we have a better understanding of what a cash flow statement is. It's important to now manage that cash. So no matter how small you are as a business, or no matter how large you are as a business, or once again, even if you are an independent stylist, it's very, very important that you manage your cash flow. Because if you don't have enough cash in the kitty, so they say, then your business might not make it. Even if the income that's coming into the business is on the positive side, that doesn't necessarily mean that it will sustain your business. Okay, you have to have enough cash, enough liquid cash, to make sure that your business is going to survive the next month. Or you need liquid cash if you're trying to expand your business. You need liquid cash if you're trying to purchase equipment for your business. You need liquid cash if you're trying to advertise. Okay, so you always want to make sure you have enough cash within the business so that way you can do things for the business that will create growth. Okay, so now that we've talked about that, let me show you an example of a cash flow statement and how you can use this particular statement to analyze what's going on in your business cash-wise. Okay, so here's an example of a cash flow management plan. Now, I'm not going to go too deep into how this plan works. However, I do want to touch on some of the high notes just to give you an idea of how you can use this type of spreadsheet to help you manage your cash. And just as an FYI, in order for you to be able to even build a cash flow management plan, all of the data that you need for your calculations are going to be part of your profit and loss statements, part of your financial statements as a whole. So if you are not maintaining your books, you're not keeping an accounting system or a bookkeeping system, you're not going to be able to have any of the data that you see here. Okay, so that's why, once again, it's important for you to maintain a bookkeeping and an accounting system. That way you can use that information to create other reports that will help you make certain decisions within your business. So what you're going to see is you're going to see all of the cash that came into the business. So as an independent stylist, of course, you have your service income. If you sell retail, you have your retail income. As an independent stylist, I'm quite sure you don't have booth rental income. And then there's other income, some other type of income that you may be receiving that is part of your business. For example, you may teach classes. You may have online classes that you teach. That's a source of income that is related to what you do. Or you might be an independent contractor for a large product company. You might receive income from there. So whatever other type of income that you receive that's related to what you do as a beauty industry professional. So you have all of that cash totaled up. So let's just work with January. So it's telling you here that in January, you brought in $20,000, 600. Then it's telling you that the cost of services and retail sales, what did it cost you to sell your services? Also, what did it cost you for the retail that you sold? Now, the only way that you can come up with a lot of the numbers on this cash flow management plan is if you already maintain an accounting or a bookkeeping system, because a lot of these numbers, well, not a lot, all of these numbers pretty much are going to come from your bookkeeping system. So that will be your profit and loss statement and possibly your balance sheet, if that will apply to you. So here you have the total cost of retail and the total cost of services. Okay, then it gives you your gross profit from services and retail, which would then be $19,992. Then you have your operating expenses, and then you have your net profit. Okay, so your net profit after all of your costs was $12,492. Now down here, you want to sort of set a goal for yourself and say, okay, how much, because the whole idea is you're trying to manage your cash, okay? So you want to set a goal based on prior data, which will allow you to come up with some of these percentages. Okay, so what is the goal of this cash flow management plan? Okay, you've looked at your prior data, and based upon what you know, you've set some goals for yourself. And the first goal is you're saying that you do not want your operating expenses to exceed 30% of your gross profit from services and sales. And when you're setting these types of goals, you want to always make sure that you're using your gross profit from sales and not your total sales. Your total sales is all the money that you brought into the business. And your gross profit is your total sales minus what it costs you to do business. So you have to know what your cost of services is. You also would need to know what your cost of retail is. Okay. These items you have to know in order for you to be able to come up with your gross profit. Now, your goal has been set to 30%. So with this cash flow management plan, I've created a column, or rather a row, for each month that would help you manage your operating expenses. As you can see, if you go over the 30%, whatever your goal is, you're going to get a warning sign in red. Everything else, as you can see, is below the 30% goal. And January is above the 30% goal. So let's just go ahead and take February above and see what happens. So for February, if we take that above the goal, you can see that it also turns red. So it warns you that you are above your goal for operating expenses, and you need to stop what you're doing, go back, look at your financial statements, look at your expenses, and see what needs to change or see what happened. Because sometimes you may have had spent money on something that you absolutely needed, but it's not necessarily a monthly thing. It could have been a one-time thing. But that's the whole idea of managing your cash flow. You want to catch things when they happen so you can go back and analyze to make sure that it's not something that needs to be corrected right away. Now you also have down here, you have some other goals for yourself. So how much should I set aside each month for taxes, estimated taxes, business savings, and your owner's pay? So you have to determine what that percentage is. That percentage is going to be, once again, it's going to be based upon prior data, either prior month data or a prior year's data. Okay, now all of these percentages are based upon the gross profit from services and retail. Okay, so after you have determined all of that, now the question is, what is my cash surplus or my cash deficit? So what this is asking me is, how much cash do I have left over after I pay my operating expenses, take out money for my taxes, take out business savings, and pay myself? What am I left with? But in this case, for the month of January, you can see that after doing all of that, you're left in the red. So you have a loss. Same thing in February. Of course, you have a loss because we increased the operating expenses from 2,000 to 15,200. So let's bring it back down to 2,000. Then you can see that in the month of February, you had a profit of almost $4,000. Okay. Now, other cash flows, cash inflow from other sources. In this case, if you have a loan, you want to plug it in here. If you contributed money to the business, let's say you didn't have enough money in your operating account to pay your bills for that month, you may decide to contribute money into your business. So you're going to include that here. And then any other type of money that comes into the business. So your total cash inflow from other sources is $24,000. So this means that the business received $24,000 from something other than operations. Okay, and here is the cash outflow. The cash outflow would be your loan repayments. So you have a loan for $19,000 and you repaid that loan in January, or not all of it, but you repaid the principal for $298. So that's the cash outflow. Then you have other repayments here. So you can plug in whatever you want here. And then this gives you your total outflow for the month. So how much cash did your business bring in the month of January? After you have plugged in all of this information, it's telling you that in the month of January, your business brought in $36,492. That's what you brought in. So you have an analysis tab that analyzes all of the data, all of the information, but we're not going to get into that. That's just too much. But it pulls information from the forecast sheet to the analyze sheet and analyzes that data for you so you can make intelligent decisions. And then here is the cash flow. So the cash flow, this is the cash flow forecast. And what this does is you start out in January with an opening balance. So let's say in January, you have $10,000 in the bank. You're going to plug $10,000 here. If you have $0 in the bank, of course, you're going to plug zero. Let's say it's a brand new business. Okay. But in this case, we'll keep it at 10,000. And then how much cash came into your business? So this is just a snapshot of everything on the forecast tab and on the analysis tab. You had $36,492 come into the business, and that's right here where you see that on the forecast tab. So it pulls it over to the cash flow tab. So when you add the 10,000 plus the 36 minus everything that went out, costs of goods sold, which includes the costs of services and cost of retail, your operating expenses. Operating expenses, of course, is all the expenses that you paid for your business. Taxes is what you took out, or rather what you saved for your estimated taxes. Your savings is how much you saved that month. Owner's draw is how much you paid yourself. And your other use of cash is whatever you paid other than expenses. In this case, you paid on the principal of your loan. So your ending balance, your ending cash balance after all of this is $29,919. Based on the analyses and based on the forecast sheets, the cash flow sheet is telling you that you have almost 3 months worth of cash on hand or cash in the bank before you completely run out of cash. So 2.8 months, which is, you might as well just round it off to 3. That's what this is telling you. So when it's all said and done, when you've plugged all of your numbers, what you want to do is you want to come back to the cash flow tab to see how much money you have on hand before your business goes down or goes under. Okay. So this is just a brief summary of how the cash flow management plan worksheet works. And for those of you that become members of my membership club for independent stylists, you're going to have access to this cash flow plan. And in addition to this cash flow plan, you're also going to have access to other tools like this that can help you manage your finances.